In this video, I'll show you how to use a simple pocket option trading strategy for better and more disciplined entries. Before we begin, remember that no strategy can guarantee profit. Trading always involves risk, so practice first on a demo account and never trade money you cannot afford to lose. Start by opening Pocket Option and choosing one popular asset with clear price movement. Avoid switching between too many assets because it can make your analysis confusing. A stable currency pair or a commonly traded asset is usually easier to follow. Next, set your chart time frame to 1 minute or 5 minutes. This helps you see short-term price movement clearly. For beginners, the 5-minute chart can feel calmer and easier to analyze. Now add two moving averages to your chart. Use a fast-moving average, such as 9 periods, and a slow-moving average, such as 21 periods. These indicators can help you understand the current trend direction. When the fast-moving average crosses above the slow-moving average, it may show that the market is moving upward. In this case, you can look for a possible uptrade. When the fast-moving average crosses below the slow-moving average, it may show that the market is moving downward, and you can look for a possible downtrade. But don't enter immediately after the crossover. Wait for confirmation. Look for a strong candle moving in the same direction, or wait for the price to pull back near the moving averages and continue the trend. Also, avoid trading during very fast or messy market movement. If candles are jumping up and down without clear direction, it is better to skip the trade. For risk management, use a small trade amount, such as 1 to 3% of your balance. Set a daily profit target and a daily loss limit. Once you reach either limit, stop trading and review your results. The best strategy is not only about indicators, it is about patience, confirmation, and protecting your balance. Hope the tutorial was helpful. Subscribe to my channel and see you in the next video.